Okay, let's dive right in. We're taking a really close look at a hidden and honestly a kind of scary issue that could be lurking inside the tax software you trust every single year. It's a problem that can mean you're filing your taxes completely wrong and you wouldn't even know it. So picture this. It's early 2025, and you're doing everything right, filing your 2024 tax return. But what if, behind the scenes, your software is secretly using the tax laws and deductions from 2025? It sounds like something out of a sci-fi movie, but believe me, it is happening. And we're about to break down exactly how and why. This brings us to a really critical glitch that tax experts have started flagging. It's a systemic problem they're calling the prior year tax trap. And you know what? It's catching thousands of taxpayers completely by surprise.
Now, let's be super clear. This isn't about getting a jump on next year's taxes. No, this is a fundamental mistake. It means the return you're filing for 2024 is being calculated with numbers that aren't even legal until 2025. Your return is just wrong right from the very beginning.
You know what's really fascinating? We can actually pinpoint when you are most at risk. And that risk level goes to critical during that February window. So why then? Well, it's pretty simple. That's when most of us are in a rush to file, and it's also the exact same time software companies are pushing out updates, sometimes with those future year features that cause all this confusion.
So you have to wonder, right? Why would this super sophisticated software make what seems like such a basic error? Well, our investigation, which is based on some serious forensic tax analysis, shows us not just a simple bug. Oh no, it's a much more complex mix of things all going wrong at once.
This quote right here, it just nails the problem. It's a perfect storm. It's about the software's design, the exact time of year we use it, and even a little bit about how our own brains are wired. All of it comes together to create this sneaky trap. So, let's break down the main culprits. First, the timing is just confusing, right? You are physically sitting in the year 2025 while you're trying to work on your 2024 taxes. Second, the software companies, maybe trying to get ahead, start showing you shiny new features for the next tax year. And finally, the tax laws themselves are always changing, and the software's code can sometimes get a little too aggressive in predicting what's coming next. Here is a perfect, real-world example of this trap in action. For 2024, the standard deduction for a married couple is $29,200. But the software, already thinking about the future, might just default to the projected, slightly bigger 2025 amount. It doesn't seem like a huge deal, but by doing that, it incorrectly lowers your taxable income, and that creates a tax bill that you'll have to pay later.
And get this, big changes in the tax law are just pouring gasoline on this fire. You've got massive laws like the Tax Cuts and Jobs Act, or TCJA, which has parts that are set to expire after 2025. The software is already trying to prep for that. Then, new laws can add complex new deductions that are just way too easy for a predictive program to apply to the wrong tax year.
But here's the thing. We can't blame it all on the software. Our own brains play a part in this. There's this mental shortcut called the availability heuristic, which basically means our brain focuses on what's happening right now. So when you're filing your taxes in February of 2025, your brain is thinking 2025, which makes it so much easier to accidentally click a button or accept a default that's meant for the wrong year. Falling into this trap isn't just about the headache of getting a letter from the IRS. The financial consequences can be really, really bad. We're talking about a domino effect that can seriously hurt your finances, and it's especially tough on retirees. This one little error can set off a devastating chain reaction. For retirees, it's something experts have grimly named the double torpedo. It's a nasty 1-2 punch that hits both your Social Security benefits and your Medicare costs.
So how does this whole thing work? Well, it all starts when your income gets calculated incorrectly. That one mistake can suddenly make way more of your Social Security benefits taxable. That's the first torpedo. Then that spikes your modified adjusted gross income, or MAGI, and because your Medicare premiums are based on your MAGI from 2 years ago, that spike unleashes the second torpedo, a huge increase in your healthcare costs.
This table is a perfect example of what's called cliff risk. Just look at that jump. For a married couple, if your 2024 MAGI is just one single dollar over that $206,000 line, your monthly Medicare premium in 2026 jumps by almost $70 per person. For a couple, that's over $1,600 a year, all because of one tiny accidental miscalculation.
And believe me, the damage doesn't stop there. If this mistake gets you a bigger refund now, Well, that's just a debt you'll have to pay back later, probably with interest and penalties. It also creates huge problems for people who invest in things like REITs or MLPs, where these really complex deductions can get messed up if the software uses the wrong year's rulebook.
Okay, so what happens if you think you've fallen into this trap? What if you've already filed? Well, the good news is there's a very clear process for fixing your mistake and getting things right with the IRS.
The main takeaway here is pretty simple. If you find a major mistake, you should definitely amend your return. It doesn't matter if the software made you claim a credit you weren't actually entitled to, or if you missed out on one you deserved. The IRS has a way for you to fix it.
And honestly, the process is pretty straightforward. It all starts with one form, IRS Form 1040X. On it, you basically show the IRS what you first reported, what the numbers should have been, and what the difference is. Then you just file it, along with a quick note explaining why you're making the changes. And here's a number you'll want to remember, 3. You generally have 3 years from the date you filed your original return to send in that Form 1040X and claim a refund. So if you find an error that cost you money, you've got a pretty generous window to get that money back.
You know, this whole mess raises a really important question for all of us. We depend on these tools, but as they get smarter and more predictive, the risk of these kinds of mistakes could actually go up. It's a powerful reminder to always double-check the details, especially the tax here for every single number before you hit that file button. It seems the best defense is still a careful human eye.